The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hello, everyone. How you doing? Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. You can catch my show Monday through Friday on the network from 3 to 4 Eastern. If you want to give me a call, talk about this market, you can do that toll free. 877-927-6648. You can pick up my show as a podcast on iTunes if you can't listen live, and if you want to listen to TFNN on your smartphone, that is a cool way to do it. All you have to do is open your smartphone browser, type in tfnn.mobi. Simple as that. And there's a button that says listen, and press it, and you're all set there. Don't forget about Tiger TV on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived in Channel 13. And with Tiger TV, you can look at charts live right along with me. You can also watch Tiger TV on your handheld device. All you have to do is, once again, open your smartphone browser, type in tfnn.com. Over on the top right-hand side of the homepage, just click that box with the mobile devices in there. It will recognize what kind of phone you have and start streaming on your phone. So pretty good deal there. Let's check in on the markets. I got to tell you, I woke up very early this morning on the West Coast, as I always do. Saw futures pointing to toward a decidedly lower open, not a fall apart type open, but firmly in negative territory. We had some GDP, fourth quarter GDP data in the Eurozone that was worse than expected, and I think the market's behavior today is just a way of reinforcing the strength and resilience that we're seeing here. So, the bears can't be happy to see price action like today. Still very stubborn about giving back gains here. So, overall, a fairly resilient performance by the market in light of weaker than expected economic data out of Europe. Basically, the Eurozone economy contracted 0.6% in the fourth quarter of 2012. The decline was bigger than the 0.4% drop that was expected. GDP growth in the third quarter had contracted by 0.1%, so it was an acceleration in the fourth quarter. The Eurozone now shows contracting GDP growth for 3 straight quarters. For all of 2012, the Eurozone economy shrank by 0.5%. So that is the deal there. All the while, we've got major averages, U.S. major averages, holding on to gains, not holding on to gains, but showing resilience, rebounding after early weakness. The Dow right now only down 5.5 points to 13,977. Trading up near its session high. The S&P 500 up almost 1.5 points to 1522, trading near its session high as well. And the NASDAQ Composite, also a pretty quiet session in Techland. It is up a little more than 1 point to 3198. So, the bears are going to say that the market is not making meaningful progress up here. We're just kind of slugging along here. Kind of hesitant to move higher. The bears will say that just means we're about ready to roll over. The bulls will say that strength and resilience is a sign of potentially more strength to come. So, the case for a pullback holds some water. The case for more strength holds some water. Again, I'm just looking at the action in stocks that we have in the Ultimate Growth Stocks model portfolio, and bottom line, I'm really not seeing anything in the way of meaningful sell signals, so we're content to let what we have currently working continue to work. Volume on the New York Stock Exchange and at NASDAQ today tracking a little bit higher than what we saw on Wednesday. tracking about 5% higher on both exchanges. Yesterday we had 1.77 billion shares trade on the NASDAQ, much lighter on the New York Stock Exchange, about 645 million. So volume tracking a little bit higher than Wednesday. Headed into today, higher volume declines, distribution days fairly well contained in the market. There really have only been 2 in the S&P 500, 3 for the NASDAQ, and 4 for the NYSE. And when you look back and you look at the 4 higher volume declines for the NYSE, you see, several closes near high. So they weren't really that weak of sessions, even when you look at those 4 higher volume declines for the NYSE. So far so good here, and again, we're just going to listen to the market, and if we do start to see higher volume declines make their presence felt, that is will be our signal to start raising some cash and perhaps head to the sidelines. But what I wanted to do right now, we haven't looked at it in a while, but I want to show you the Dow with its 10-day, 20-day and 50-day moving averages plotted here. You can see the 10-day and 20-day moving average fairly close together here. The Dow's 20-day moving average is at 13,891. So Dow really wouldn't have to correct or pull back too far to get down to its 20-day moving average. If there's a convincing break below that support level in heavy volume, I will likely start to take some money off the table here, because then it would bring a trip for the Dow down to its 50-day moving average, which is 13,512, into play. Have to remember the market is up about 13% since the mid-November lows, and a pullback right now for the Dow would only be a pullback of about 3.5%, which is pretty tame considering how far not only the Dow but the S&P 500 and the NASDAQ as well have come since mid-November. Let's take a look at the S&P 500. You can see its 20-day moving average is at 1505. The 50-day moving average down at 1465. And finally, the NASDAQ Composite, with its 20-day and 50-day plotted here. 20-day moving average for the NASDAQ Composite, 3161. That is about 39 points lower from where it is now. To get down to the 50-day moving average, again, about a 3.5% pullback would take it down to that 3090 level. So, we'll see what happens, but hopefully in the near term, just looking for indices to find support at their 20-day moving averages. If it doesn't, we'll start to take some profits, maybe partial, maybe full, and let's just see how things play out. Mentioned the economic data out of Europe today. That has fueled more weakness in the euro. Let's take a look at the currency shares Euro Trust. This is an ETF that generally tracks the price of the euro. Still holding above support here. I think this 50-day moving average for the FXE is a critical support level. 50-day line is at 131.69. FXE last trading at 132.40. Down 0.7% on the day. And we did have a big rally in the U.S. dollar today. Markets performance pretty resilient in light of this strengthening dollar. Here's the UUP, the Power Shares Deutsche Bank U.S. Dollar Index Fund. It gapped up, as you can see, up 0.4% to 21.96, trading near its session low. So U.S. dollar index last trading at 80.47, up about 0.5% on the day. Taking a look at some headlines. We got to start with H.J. Heinz, right? Catch-up maker up almost 20% to $72.50, a $28 billion deal. Values H.J. Heinz at $72.50 a share. Berkshire Hathaway and 3G Capital are going to do this deal, and you can see H.J. Heinz rallying powerfully on the news. Heard on CNBC today that already this year there have been $182 billion in transactions so far this year. Last year, a total of $58 billion. So, the story of increasing M&A activity in 2013, I think, is a very real one. I think there's a good chance we're going to continue to see it. And normally when you get heightened M&A activity, that is pretty good, usually fuels positive sentiment in the market. So that's another feather in the bull cap here that we could continue to see more merger and acquisition activity in 2013. Another big deal today, American Airlines and U.S. Air. They're merging in $11 billion deal that's going to create the world's largest airline, LCC. That is U.S. Air's ticker symbol. We'll see kind of the wild price action today. It is down 7.6% to 13.55. A big break in heavy volume below the 50-day moving average. And let's take a look at American, let's see, is it American Air? Yeah, I don't know that there's a ticker for AMR, but anyway, U.S. Airways Group down 7.6% to 13.55. So another big deal there. What's the benefit to consumers? Not too much, really. When you have a big merger like this, both of these airlines have anywhere from 3,000 to 3,500 flights per day. You're probably going to see fewer seats as a result of this merger, and the potential for higher prices as well. Also want to take a look at Constellation Brands. Big move for this stock today, up 36% to 43.26. Good deal for Constellation Brands because regulators were not real keen on Anheuser-Busch InBev and its plans to buy Modelo, the brewer. So what happened is that Busch agreed to basically give full control to Constellation Brands, the Corona and Modelo brands in the U.S. for about $2.9 billion. Anheuser-Busch InBev controls almost half of the U.S. beer market, so this previously announced deal to acquire Modelo, that was not met kindly by U.S. regulators, so Anheuser-Busch InBev said, okay, we'll sell the Corona and Modelo brands to STZ, and that's going to result in nice earnings potential for STZ, which is why you see the stock up huge today. Take a look at shares of Ulta Beauty, another stock in the headlines today, ULTA. Haven't talked much about Ulta Beauty recently, talking about a late-stage base when we were talking about it, but the bottom really fell out of Ulta today. It is down close to 12% to $87.69. CEO Carl Rubin is resigning at Ulta. He's going to join privately held Michael's Stores. This is an arts and crafts retailer. Very interesting news. I can understand the investor skittishness when you have a CEO leaving what appears to be a very a company well positioned for growth in Ulta Beauty, but he has decided to move on, headed to a privately held company, Michael's Stores. All right, that's going to do it for the first segment. We've got several more, taking us to 1 o'clock Pacific, 4 o'clock Eastern. So we will be back in about 3 minutes. Got a lot of earnings reports to go over, and we'll do that when we come back. Stick with me.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Thanks very much for tuning in, checking in on the 3D stocks today. It always seems like as a day goes by where these 3D printing companies aren't in the news. Apparently, Citron Research. A lot of people say this website has no credibility. It's a notorious short-selling website, but it does move stocks when they come out with negative comments, but 3D Systems under pressure. Apparently, Citron Research calling 3D Systems a bubble. It is down 4.4% today to 62.75. Extreme volatility in the 3D printing companies. Stratasys also down big today, down 5.9%, almost 6% to 71.37, falling further below its 50-day moving average. Now it looks like its 200-day line at 63.38 is in play at this point. Of course, yesterday, one of the big movers of the day, Proto Labs, PRLB. This is also in the 3D printing space. They don't actually sell the actual 3D printers. They offer 3D printing as a service. So Proto Labs, as you can see, down 7.7% today after a monster move for the stock yesterday. So just a lot of volatility in the 3D space. I don't have I don't own any of these stocks, and probably not going to in the near term. All right, let's take a look at April gold today. Still under pressure here. It drops another $9.60, 0.6% to settle at $1,635.50 an ounce, according to FactSet. That is the lowest closing price for a most active contract since August. So gold remains under pressure here, and we'll see that in the chart of the GLD, which has been, as you know by now, facing repeated resistance at its 50-day moving average. Last week, gaps below its 200-day moving average. It is down another 70 cents today to 158.35. In the gold space, we did hear from Barrick Gold, ABX. They reported earnings that were down 5% from a year ago to $1.11. That was 5 cents better than estimates. Sales also better than expected, up 11% to $4.19 billion. You can see the stock is trying to rally here, but this is another case. This 50-day moving average here at 33.63 could be a pretty significant resistance level for Barrick Gold. It is up 3.1% today to 32.58. Barrick said it looking for 2013 gold production between 7 to 7.4 million ounces. That would be down a little bit from 7.42 million ounces in 2012. Barrick Gold also involved in copper. They think copper production in 2013 is going to come in between 540 million pounds, up from 468 million pounds in 2012. March crude oil today up 30 cents, 0.3%, settles at 97.31 a barrel. A couple of large cap oil and gas producers out with earnings today. They've been very strong performers in the market. Pioneer Natural Resources. Now, this is a stock, again, it's just not buyable here. The breakout was basically over $110 back in early January. It's now trading at $130.15. So you don't want to chase it up here. Also, a pretty wild day of trading. Pioneer Natural Resources hits a high of 133.68, a low of 120, trading up near a session high, again up 2.7% to 130.15. Pioneer made 83 cents a share. That was a little bit below expectations. Sales growth pretty good, $818.7 million. That was up 19% from a year ago. Better than expected by, $30 million or so. So Pioneer said it is also going to issue 8 million shares to raise funds to accelerate drilling at its Wolfcamp Sprayberry shale fields in West Texas. Pioneer is producing about 165,000 barrels a day. Also heard from EOG in the oil and gas space, another oil and gas producer. EOG Resources reversed after early strength. Stock hit a high of 138.20. Initial happiness about the earnings report. Earnings were up 40% to $1.61. Big beat there. The consensus estimate was for $1.35. Sales were up 9% to $3.01 billion, mostly in line with expectations there. After early strength, EOG is only up about 8 cents now to $133.68. Stick with me, folks. We'll update the major averages when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you, as I am Monday through Friday, 3 to 4 Eastern on the TFNN radio network. Checking in on the markets here. We're positive now. The Dow up about 1 point to 13,984. NASDAQ Composite up 3.5 points to 3,200. S&P 500 up close to 2.5 points to 1522. One other earnings report in the oil and gas sector I'd like to talk about is Oceaneering. Boy, these big, wide intraday spreads. Also seeing it in Oceaneering here. Stock is up $1.33, 2.1% gain to 64.69. You can see the breakout here over 57 back in January. Another stock that is extended in price here, so you don't want to touch it up at its current level. This price bar here looks wrong because I'm looking at another charting services that shows a high of 81. A high of 81.50 and a low of 79.49. So some of these charts from stockcharts.com don't look to be correct. So we'll check in on that. But anyway, the numbers at Oceaneering were pretty darn good. Earnings up 37% from a year ago to 74 cents a share. That was 2 cents better than estimates. Sales up 36% to 781 million. That was close to 50 million above the consensus estimate. Oh, wait a minute. You know what? There's these ticker symbols that are so close. I was looking at OIS. My mistake. All right, so start over here. Oceaneering, this is a correct chart. This is the correct price spread. For Oceaneering, hits a high of 65.37, a low of 58.52. Stock right now is up 2.1% to 64.69. And but I maintain the numbers were very good. Oceaneering provides deep water engineered services and products to the offshore oil and gas industry. So nice numbers from Oceaneering. Haven't mentioned bond yields today. The 10-year note reverses after early strength. It is now trading around 2% on the day, near its session low. Same with the 30-year bond, reverses after early strength, trading right now at 3.18%. We did get economic data earlier today. Weekly jobless claims, larger than expected, dropped to 341,000. The estimate was for a drop of 1,000 to 365,000. Prior week's claims were revised slightly higher to 368. So when all said and done, weekly job claims, bigger than expected drop. Good to see. Tomorrow, we're going to hear the Empire Manufacturing for February, industrial production, capacity utilization, and also the latest reading on consumer sentiment from the University of Michigan for February. Some earnings standouts today. Let's take a look at Equinix. Remember, we heard from Rackspace yesterday. The stock got ripped apart. Equinix is a provider of data center services. You can see the stock is up 6.3% today to 226.42. Headed into earnings, it was flirting with a break below its 50-day moving average. Some big sellers in the stock on Tuesday and Wednesday, but the numbers were pretty good at Equinix. 66 cents a share, beat views by 5 cents. That was up 89% from a year ago. Sales up 20% to $506.5 million. That was only slightly better than expected, but investors clearly happy with what Equinix had to say. And a couple of big short squeezes today. We got to check on shares of Zillow here. Credit to the company for delivering an excellent quarter. Short interest very high in Zillow, ahead of earnings. Another gap up here that is trading near its session low. Zillow hits a high of 47.85. It's now trading at 42.70. Still up 9.6% on the day, but trading near its session low after early strength. Zillow was expected to produce break-even earnings. They actually made 2 cents a share. That was down 33% from a year ago. Good sales growth, though, up 73% to $43.3 million. That was well ahead of the consensus estimate of about 31.5. Company cited record traffic at its website, record marketplace sales, and they continue to benefit from a migration to mobile. People getting more of their information from Zillow on mobile devices than the actual website. So nice numbers from Zillow. And don't forget, yesterday we heard from Trulia, TRLA, recent new issue, a competitor of Zillow. And Trulia had a big technical breakout yesterday, and it is extending gains today, up 4.7% to 30.37. So nice numbers from Zillow. Name I don't follow that closely, but nice numbers from Angie's List, ANGI. Big gap up for Angie's List. It is up almost 25% on the day to 16.97. They were expected to lose 2 cents a share. They actually made a profit of 4 cents. Sales up 68% to $46.2 million, better than expected. Nice revenue guidance as well. Angie's List, we've all used it, I think. If you haven't, it's a pretty nice little resource. You can use Angie's List to research, rate, review local professionals for home, healthcare, automotive needs. just a great place if you're looking for a service that needs to be done. Check out Angie's List. Stock got an upgrade today from Raymond James to strong buy from Outperform. Raymond James cited improvements in the company's operating leverage, and also nice numbers from ValueClick today, VCLK. This is a digital marketing firm, and here is a gap up that is holding its gains and then some. Very impressive move by ValueClick today, up close to 20% to 26.12. When I see a lot of these speculative names, and I guess I'd put ValueClick in that group. Angie's List, certainly. Zillow, perhaps some of these IPOs that have come public. It does strike me that you tend to see kind of excessive speculation at or near market tops. And again, I'm not ready to go entirely bearish here on this market, but when you see some of these percentage gains on better than expected earnings, it's just a yellow flag to me that it has been seen in the past at or near a market top or right ahead of a market pullback, where you see excessive speculation in some of the more speculative, lower quality names out there. So, on the one hand, you've got a lot of institutional quality growth stocks, the LinkedIns and the Michael Kors, and there's a whole slew of them that are acting very well. But you do have a lot of smaller names that are making huge percentage gains here. So you just want to be aware of that. Anyway, nice numbers from ValueClick. Earnings were up 22% to 56 cents a share. Sales up 14% to almost $200 million. So that was better than expected on the bottom line and top line. Take a look at TripAdvisor. TRIP is the ticker symbol here. TripAdvisor is basically an online travel research company. Slightly different business than Priceline. Of course, online travel firms are pretty much everywhere these days, and many have good fundamentals. The numbers at TripAdvisor were pretty good. Earnings up 21% to 29 cents a share, 2 cents better than expected. Sales up 23% to $169.4 million. That was also better than expected, but as you can see, TripAdvisor gaps below its 50-day moving average in very heavy volume and still holding above the 200-day line, but at the very least, this one looks like it is ready to base and consolidate gains for a little while. We also heard from Whole Foods Market after the close on Wednesday, and boy, has this one just fallen apart here. We were actually short Whole Foods back in the November, December area. It was a profitable position at one point, and then the stock started to rally here in early January, and we closed the position for a loss of about, very small loss, about 2%, something like that, 2-3% loss. And at the time, it was a good idea because Whole Foods really did start to move here. But this is a stock, again, the reason we went short, because it was starting to face resistance here at its 50-day moving average repeatedly, sign that buying demand was drying up. But the short premise here, obviously, if we had been patient, which again, you don't want to watch a small loss ever turn into a big one. So we played the odds and kept losses small. But again, stock down 10% today to 87.30. The numbers here. Earnings up 20% to 78 cents a share, a penny better than expected. Sales up 14% to $3.86 billion. That was mostly in line, but as you can see, with the stock down close to 10% today, it is probing a low of 86.85 that it set in January. So Whole Foods Market not looking healthy at all here. Another earnings decliner would be GNRC, Generac Holdings. They make power generators. You can find them in Home Depot. It is down 8.3% today to 36.02. Stock was hitting 52-week high ahead of the results. It under a lot of pressure today, but notice that it is still holding its 50-day moving average, an area where it has found support in the past. So it hasn't broken down yet, but big sellers in the stock today, no question about it. They beat earnings estimates handily with profit of 87 cents a share, up 14%. Sales were also well ahead of expectations, but didn't get to look at this earnings report too closely, but maybe there's something in the outlook that the market does not like, because good bottom line and top line beat by Generac Holdings. Some healthcare names under a lot of pressure today. Former leaders as well. Regeneron Pharmaceuticals. We've talked a lot about this stock. The stock made a big move earlier this week on Monday. News that Sanofi was going to, buy more shares, increase their position in the company. Sanofi can't own more than 30% of Regeneron, but you can see after initial enthusiasm on Monday, the stock reversed and closed near its low. The numbers at Regeneron were pretty good. They smashed earnings estimates. They beat sales by a wide margin, but there are still sellers in this stock, and again, this is a stock that below its 50-day moving average, buying demand clearly drying up here. Looks to me like the chance for more downside is here. So I'd be careful about trying to catch Regeneron on sale. It is down 0.7% today to 169.12. And then another former leader, Alexion Pharmaceuticals. Its key drug is Soliris, used to treat a rare blood disorder. A lot of sellers in this stock too. Has been technically very weak since late October, and more sellers in the stock today, down 5.2% to 87.24. Sellers still in control in this name as well. But I got to tell you, when you look at recent quarterly earnings and sales growth, not only at Regeneron but also Alexion, a lot of fundamental guys will say, well, wait a minute, they're still growing nicely. Growth prospects are still bright, but this is exactly why you need to implement a little bit of technical work as well when you're evaluating a stock, because Alexion still shows the growth. Growth prospects still look pretty good. Their earnings were up 46%. Sales up 41%. Good bottom line and top line beat, yet the stock cannot get out of its own way. And then the last earnings report, let's take a look at Cisco Systems. Kind of a bellwether tech, has been showing relative price strength ahead of earnings. It has rallied nicely, well off its session lows. Came down close to its 50-day moving average at 2041, hit a low of 2051. It has rallied and is up near its session high, last trading at 2094, only down 19 cents on the day. They beat estimates by 3 cents with profit of 51 cents a share. That was up 9% from a year ago. Sales up 5% to $12.1 billion, maybe just a hair ahead of estimates. Cisco Systems still holding its 50-day moving average here, and again, a company during the big bull market of the 80s and 90s, a stock that was growing like gangbusters, probably has passed its best days of growth are clearly behind it. You can make money in stocks like this, but again, focusing on the newer tech names that are still in the early stages of growth. See maybe a LinkedIn. This is where my focus is for the Ultimate Growth Stocks model portfolio. So Cisco, perfectly fine company, but not growing nearly as fast as it once was. And every company, gets to that point at some point. I think Apple is pretty much there at this point, not going to be able to maintain growth rates that investors are used to, which is why the stock has been struggling. All right, folks, we'll be right back. Final segment coming up. We'll check on the markets one more time, and we'll do that in about 3 minutes. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone. Checking in on the Dow here. About 5 minutes left to go in Thursday's session. Right now, Dow down 14.5 points to 13,968. The S&P 500, see what that is doing here as we head into the close, up fractionally to 1521, and the NASDAQ Composite also up fractionally to 3197. So again, early this morning, looked like stocks were poised for a lower open. You know, if you had gotten a headline like we did today out of Europe, say last year in September, October, I think the market's response would have been much different. The difference this time around is that this is not a market that is under distribution, at least not yet. So again, it remains to be seen. On the one hand, it looks like with the Dow and the S&P 500, remember, they have not broken out over their October 2007 highs. The NASDAQ composite already has, so there is a chance for more gains here, especially with everyone, seemingly calling for a market pullback. Sometimes the market does what the market doesn't expect it to do. So you got a lot of people slanting one way, looking for a pullback. Sometimes it doesn't happen. But again, we'll continue to watch price and volume. You're just going to want to watch when the indexes come in and go lower. What does the volume look like behind that downward draft? If it is expanding and you start to see consistent signs of institutional selling, then that's the time to get defensive. But again, headed into today, only 2 higher volume declines for the S&P 500, 3 for the NASDAQ, 4 for the New York Stock Exchange composite. That is mild distribution at best, and nothing to be alarmed about yet. Coming up after the close, we've got a few earnings reports to keep an eye out for. Let's take a look at CBS Corporation, ticker CBS, showing relative price strength, a bit extended up here. One of many stocks out there that are extended and too late to buy at current levels. CBS up 18 cents to 42.85 ahead of earnings after the close. Look for a profit of 69 cents a share, up 21% from a year ago. Sales basically flat at $3.79 billion, and we're also going to see what IT staffing firm On Assignment has to say after the close. Profit of 28 cents a share is expected. That would be up 40% from a year ago. Sales up 139% to 387 million. Big sales growth in recent quarters at On Assignment is due to a big acquisition it made last year of Apex Systems for about $600 million. So the company's seeing nice revenue growth as a result of that acquisition. And you can see a big gap up for the stock here on January 2nd. That was a day that many stocks gapped up out of basis here, and continues to act very well. Also after the close, PCYC. We talked about this one yesterday. Remember, this company is developing a drug with Johnson & Johnson to treat a rare blood cancer, and it received a new kind of fast-track designation or breakthrough technology designation from the FDA. I forgot specifically what it was called, but it is basically setting that drug up for a quick approval process, and that's why the stock was up big yesterday, and it is extending gains today ahead of earnings, up close to 5% to 80.69. Tomorrow, we're going to listen to what IPG Photonics has to say. IPGP, strong performer, reporting earnings before the open. We're also going to hear from J.M. Smucker, Kraft Foods, Campbell Soup, VF Corp. So a busy day of earnings tomorrow as well. Coming up next, the Tom O'Brien Show. I'll be back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day, folks.